Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the market. So we got our daily lower high as we were keeping an eye out for. It came with a double rejection from the 100-day moving average, but we were watching for the loss of the hourly uptrend to indicate that top was in for now. Now we're going to look for a tightening daily range into mid next week. We're going to look for the higher low to form on the daily compared to 270.36, but it could break. The only way it will break, in my opinion, is if we see some big notable bear volume and if we have both the financial sector and the tech sector seeing weakness at the same time tomorrow and Monday. If we do not see that, if we see one of the sectors holding up, again, a higher low is the most likely scenario and a tightening range into the middle of next week. So as long as that is the case, I scale back my trading and I will go aggressive when that tightening range gives us a break. So that's what I'm anticipating to happen. Now I look on the shorter term time frames and the hourly charts to get the clues that that is what is indeed happening. Our higher low on the daily will be marked by an hourly change in trend. Right now, this bounce on the hourly from the end of the day today into after hours is a weak bounce. It is a potential bear flag, and anything under 280.07 is just a lower high in my opinion. So we know this hourly bounce is more likely than not to give us just a lower high, and it will require a lower high, higher low, and then a higher high to see a trend change on the hourly time frame and to give us the indication that our daily higher low has been established, and we'll see that tightening range from there. So at this point, the bears still have control as long as this trend on the hourly is in a downtrend, and we've filled back a lot of the space. We knew how extended we were 2 days ago, filled a lot of that back. The clear first bear signal today was the loss of the low of the reaction to the Fed minutes yesterday, and then the confirmation, which happened in the same hourly candlestick, was the break of the low yesterday. That loses the hourly uptrend. Let's see now if we reject on the back test of the mid 277s and set that lower high on the hourly up at those levels. IWM, very weak bounce and less room for the bulls to form a higher low compared to 151.88. So we could see the bear break on the inside bar followed through today, but we could see continuation down. And if we do, if we see the bulls unable to hold 151.88, that will give a slight shift in the percentage odds that SPY is going to drop down to a lower low as well. So we'll keep an eye on that for IWM. Weekly inside bar is pretty much a sure thing on the most of these names. So QQQ with a very clear top. And now again, we're looking for the higher low compared to 167.81. Let's check out the hourly signals that were given on QQQ. We had the high and the low of yesterday, lower high, first signal, bear break of the low of the Fed reaction. And then the second signal, break of the low yesterday, all out dump in response to that. Hourly trend changed, daily lower high was established. So again, change that hourly trend back to the bulls. This is a weak bounce at this attempt. It is not significant. But if we change the hourly trend back to the bulls, we'll look for the daily higher low and tightening range in an equilibrium heading into next week. And again, into later next week because there's only one more trading day this week. XLF, very weak. Same thing, looks similar to IWM. Can the bulls hold 26.03 is the question. If we drop down to lower lows, the odds that SPY heads to lower lows will increase. VIX, we were looking for a daily higher low. We knew it was coming soon. Let's check TVIX hourly time frame where the trend change occurred. And we had the bull spike, lower highs and lower lows. Here's our higher low. This candlestick right here to start the day gave us the first bull move. Then we had resistance at 39.49, which was the top of the Fed reaction. And look at this resistance, 39.40, 39.46, a triple top. And then all at once, boom, big bull break on the break of 39.50. We then follow through all the way up to 44.55. And this was about a 20% move, a little bit less than that, but obviously very significant. Question is now, how long can the bulls keep up the higher low and higher high pattern? And we're looking for the inverse of what we just said. We're looking for a daily lower high to form and an equilibrium and tightening range. And when we lose the hourly uptrend, that's our indication that the daily lower high has been established. So one step at a time, one day at a time, we get more information on what's the most likely scenarios, and we trade based off of that. So I'm going to be watching for these tightening ranges into next week, and we'll check back in over the weekend to see if that is still the most probable setup. Hope you have a good night. We'll see you soon.